The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. Dow's up 41 at 19,656. 19,656. The S&P is at 2,252, up 6. The comp index is up 25 at 54.42. Gold right now is down about 7 at 11.64. Silver's also down. You've got high-grade copper which disappeared right now. High-grade copper is at 51.37 at 53 cents, and bonds are down almost a full point. And the dollar, when I last looked, was up at 57. So let's go through this very steadily, one at a time. I just need to finish something here on my side there. Okay, there we go. I'll be able to get the emails in a moment. I just refresh. So any questions you have, we'll deal with that in a little while. Whoops. It's a down arrow yet. So let me go through the numbers. Today's Technical Friday, so we'll do some technicality. Tom was talking about the fact that I've mentioned to him for quite a while that we've got a stork leg formation in the Dow. What is a stork leg formation? Oh, it goes back, way back to the 1980s. When I noticed it when I was hand charting, that there was a pattern that seemed to go like a straight up move, and then there was an oval pattern, and then there was another extension to the upside. And that extension could be really short or be quite long. And it looked just like a stalk. You know how a stalk stands on one leg, and this body, this oval body, wide body, is held up by this skinny little leg, and the wind blows and it's still standing there perfectly, and it's got this long neck, and the other leg's tucked inside. So I thought it looked like, and ever since then I've used this particular pattern. I used to use it only on the Dow. Now I use it in other, because it's a pattern that gets repeated over and over, I use it elsewhere. But here it is in the monthly chart. And what it says, let me just open this up, that you have a long period of an extension. This has got nothing to do with peaks and troughs. This has to do with a long extension up. And then there's an oval pattern. And it cannot be a rectangle. The rectangle is something completely different. This is the rectangle pattern right there that we're using in the Dow. The reason why we are along the Dow, we've stayed along the Dow, is because of this, which has a one-to-one relationship to the body, which the stork leg does not have. And we've already extended past one-to-one in the Dow, up 40 already. Look at this, going from the 17,883 level to today's high of 19,671. Almost 2,000 points. All right, now let's go back here to our chart formations. I want to get the emails. Give me a second. I'm just going to click over here for a second, and then I'm going to click here because I want to be able to keep up with what people are asking me. And I'm also still getting emails from my webinar the other day. People are asking about different trades, which is really very nice. So I've got this going, and I'm about to look at it. Okay, questions are just starting to come in. This pattern, as I say, it invariably goes to a leg D or higher, but D doesn't mean to say that it has to end there. And that's why I'm thinking that 2017, the first 3 months are going to be, maybe 4 months, I don't know. It's going to be very exciting. But we are going to have a dip at some point. But the weekly charts is suggesting the dip won't take out the 17,883 low. It will come back very sharply, scare the dead out of all those people who just got into the market for the first time in ages, and then we'll move to the upside to higher peaks. I think this has got the more the characteristic, not of an F in the weekly chart in the Chapman wave. That's where you're really careful, but more like an A. So that would be very exciting. So let's go through this very carefully. We remain along the Dow, and the MACD is getting a little choppy. The stochastic is really good at 97%. I've been waiting patiently for the on-balance volume to give me the clue as to whether or not This is a recycle to the upside. How do I explain that quickly? Let me just say that at peak D in the Chapman wave methodology, there's a technique that I show subscribers. This is going on for a long, long time. I'm talking 20 years at least, where I found out that at a peak D, if there's a very quick succession of the consolidation and within 3 bars it makes a new high, you can start to get a parallel wave count. And that can take you to a brand new buy mode, which very often doesn't even stop at a D. It goes to an E in the second time round. So I'm not getting too carried away here. We're fortunate enough to be able to just raise the stops and say, hey, you tell us. I didn't want to go short. We had a position yesterday that said if the Dow did such and such, then we would go short, and we would go short via the S&P, but we didn't get even close to that. So I've taken it off now, at least for now. Next week, I'm probably going to start thinking about putting it back on. So the Stork Lake formation just says that this is the neck, and the neck can continue for a while. Okay, I just want to make it as simple as possible. This pattern here, the 1-to-1 in the Chapman wave, this is almost the same pattern as the one that I spoke about a little earlier on. This one that I haven't really named this. This is a propeller. I always talk about it as a propeller shaft. The blade on the downside equals the blade on the upside, and that's the fulcrum. But most importantly, what we're looking at here is that there are just too many areas that are strengthening at this particular time. And that's the reason why I'm thinking that if I go, now I'm going to go through each chart. So this is the Dow has resist. Can you believe they're going to start printing the 20,000 Dow 20,000 hats very soon? Wow. I'm guessing, okay? Support, most importantly, the support over the next 5 trading days that's going into next week, Friday, for the whole week, I would put the support at 19,450 to 19,350. This whole area, the 19,371, is the 9-period exponential moving average. I'd like to see that as a support, and then that's going to suggest to me, yes, the weekly chart is holding beautifully. For breaks under that, I'll have to reassess. All right, Dow. That's the S&P coming up right now. S&P is in leg E. Now here I haven't put E/A. This actually looks more like an E at this particular point. So there's some mixed signals, but that's okay. We don't have anything in the S&P. I'm just saying that the MACD is very strong, but it's on the right shoulder of the M formation, and the same thing in the stochastic, but the stochastic's at 96%. I don't want to mess with a market that's in 96% if it flattens out. So we'll have to see by Tuesday or Wednesday next week if the stochastic's still in the 93% or higher area, because that'll be flattening out. But if it starts to dip and goes into the 80s at any point, that's a heads up to say watch out below. So that's a 22.53 right now. I'm calling 22.41 to 22.37 as the kind of support that I'd like to look at. 22.23 is the 9-period exponential moving average. You break under that, it starts worrying me a little bit about the weekly chart. And on the upside, I don't even want to give upside potential, because this is open area. There's nothing there. You've only got clouds above. So all I can say is that probably I'm looking at, for the whole week of next week, the 22.61-ish area will be very strong resistance. I'll go to the dollar now, just as we're about to go to the break. Dollar is in, this is a beautiful breakout pattern of the Chapman wave falling axe formation. I'll talk about that when we get back. Basil Chapman, Tiger Ignitions Hour, Gaza 50.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank Bank is a member, FDIC, and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So let me just check one thing. Yeah, IWC. Yeah, we'll get there. Okay. So the dollar, you see, this is very important. You see this pattern right here? Just for the moment, I'm going to make it nice and thick. What color should I use? I'll keep the same color. I'll just make the weighting a little bit bigger. So that's there. And I'm also going to make it solid because I need to show you the pattern. Right here and right here, style. Weighting. Got it. Okay. So this pattern here, I called the falling axe. I nicknamed these different patterns over the years, and there's another one right there. And why did I do that? Because the result is really the only thing that I'm interested in. I'm not interested in the whys, the wherefores, or anything else. I just want the result. That's technical analysis for me. And in this particular instance, what we're looking at is a peak that's made at a potential peak F, maybe a B, but it's a peak of significance because you've pulled back in an extended period of time. And therefore, there's a pattern that I talk about, the one-to-one relationship. And that said to me, and let me show you in my CD introducing the Chapman Wave methodology. Gosh, I haven't shown this for a while. The falling axe. It's just merely a cone on its side going down with lower lows and much lower highs and much lower lows. Here's one. Probably this is a better looking one right there. And then there's a relationship that says the distance between the top and the bottom can be equal to the top of the line to the bottom of the line can be equal to the upside. Okay, a one-to-one relationship, but it's actually not always any one-to-one. What happens is it occasionally sets up a one-to-one that is repeated a number of times. Look, we had a one-to-one relationship of the same thing right there. And this is the dollar when it made a high of 99.12 back in the October the 25th. So this pattern is very positive, but I tend to go one step at a time in all the analyses that I do. And that step says, when you break out, you have to close decisively over the very first left side peak. Well, that's this one right here of 101.54, but that's not good enough. It's the peaks over the going to the top of the trend line. So that really says that this one right here at 101.83 on the 30th, it needs to close above that. Well, if it closes above that, it is within an eye blink of 102.05. So I love what's going on in the dollar right now. But on a purely technical basis, the way I do the technicals, I'm not happy. I just treat it as another technique that says, yep, the stochastic has turned up very nicely, but it's only at 38%. The MACD has turned up nicely, but it still hasn't even got close to crossing positively. The histogram, these little vertical lines, that's the 9-period differential right there. That histogram is improving, but it hasn't gone above the 0% line. But what's really exciting is that if the dollar breaks out, I'm going to have to call that because of the power that it breaks out. If it closes above not 102.05, it needs to really get into the 102.30s, maybe 102.50s with this, preferably with this leg. If it does that, three things are happening. One is, not only has it broken out in the pattern that I love to see, a one-to-one relationship, but it's confirmed that it is closing. It needs to close above 102.05. It's confirming that it's closing above 102.05, and it gives the MACD and stochastic all that time to get back to very positive levels if this is going to be like the start of a new bull move in the dollar, a breakout move. So there's a lot of ifs. And the second thing is, the third thing is, I look at the weekly chart, and I've got an alternate count with a potential Chapman wave instant restart from that peak D, which says this could turn out to be, if there's a break to the upside, not an F, but a new F/B. And what does that do? For the first time, we're looking at the pattern, the inverted pattern of the euro dollar. Let me just show you as patterns go. This pattern right here, this one that I keep talking about, the lowercase h goes to a lowercase m, which invariably retests and breaks the low of the left side. Well, if it does that and holds below it for a significant period of time, that's the equivalent of the dollar breaking out to the upside with exactly the same pattern in mirror image to the dollar's upside. So that's why I'm looking at this. I'm saying, wow, I'm kind of impressed. I was very depressed the other day because we were looking at it during my show and it was way down here. And I thought, that's so unusual. Gold is not moving. The dollar should really be skyrocketing. By the end of the day, it really had a good move. So I'm looking at this and I'm saying a lot of evidence for my mega bull market move that says the coda phase is now in a second. It's broken into two pieces, actually really broken into three pieces. The third one will be where every day on the front page of the newspaper you're going to see down you high, where the market overborne, crash coming, and it just keeps going higher. But we aren't even close to that. So I'm throwing it out there because I just want to get it on the record that there is a potential for that kind of phase to come about. Okay, that's enough with all the stuff. What I really wanted to look at is I had a question about the crude oil. Crude oil is, look, holding very nicely here. I said it's kind of stuck, trapped in a range. I like what it's doing. But until crude oil at 51.41 up 57 cents closes above the left side high in the monthly chart of June that had a high of 55.20, I think it's just kind of stuck in this range. And here's the same thing. Remember we were talking about the Chapman wave falling axe formation? In a sense, this is a little bit like it, but there's the resistance line. And I'm going to make this red, and I'm going to make one above it that is green, and we'll just watch it for now. And that says if there is a significant close above this level here, right here, that is the high of 52.42 made in the 9th of December. That's that's this week. Good grief. That's this week. So I have to look at the one on the left. That was the one in October at 52.75. If there is a significant break above it, this becomes support. That whole trend line, this is called the Chapman wave inside track repellent zone. It becomes a propellant zone if it breaks above and starts to hold. Let's make it real simple. Okay, now we want to do a couple of things here. Oh, IYT. This is the Dow Jones iShares Transportation Average Index Fund. I've got it in leg F/B. The height of this move here suggests that we are probably closer to a B, with a pullback for peak B, then a C, and then a pullback, and then a D, and then I think we're in trouble. Then I think the market has a pretty decent pullback, and I'm suggesting that pullback comes in December. Everyone's talking about I always talk about if markets survive the September decline, whenever there's a big September decline and has a good October, then we could be looking at the market closing at just above or just below what turns out to be the yearly high, or if there's a left side that is looking at close to that level. So I don't see any difference here that we could, in December, this month, go to new highs. I don't know. We might even turn out to have the same December, January, not the same severity, but a December, January like we had last year. Patterns repeat. So I'll be back. I had a question about the IYR, and I'll go to the IYR as soon as we return. Basil Chapman, Tiger Technicians Hour.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. We're looking at the IYR. The IYR is the iShares Dow Jones US REITs Index Trust Commercial Properties. Most importantly, it's at a leg C, just stopped at the 200-period moving average. It got hammered. It went from the 85s down to the 72s, right through that whole July, August, September, October period. And now it's at a nice spike to the upside. But the monthly chart says to me, you got to be careful. So I'm not sure if the question is, would I be looking at the IYR as a buy? I would rather give it a little time I don't even mind if it goes to a D because of that weekly single leg A up in the this move that really extended this past week. So all I'm going to say is if you are in the IYR, if you manage to get in nicely, I think that's great. That's very nice because I could still go a little higher. It's a 77.39 right now. IYR and 77.99 was the high today. I think you can go at maybe make a peak C. It doesn't have to go to a D because this is really the gray C, way under the peak E that was the high of 78.92 back in October the 24th. So I'm thinking that give it a little time. I would like to see it maybe back in the 76s. If it can hold the 76s, then I'm going to say, yeah, as an income related fund, maybe you can start a position. There's that uppercase A. You remember the Eiffel Tower? It seems to have held the 200-period moving average nicely, but I'm a little concerned about the weekly. So I'm going to back out, and I'm just going to say I wouldn't buy it right now, but I would buy it 1.5 points down, lower, somewhere around there, or at least I'd consider it. Because I'd give it maybe no more than a 2-point stop, maybe a 3 to 4% stop, mainly because that's kind of your dividend. And then I just have to wait and see what happens. But the monthly chart says to me, could be a problem. It could be quite a bit of retesting to do. So now let me go to the next question, which was the IYT, which is, did I finish the IYT? No, I didn't. The IYT, the transports went to, I believe that's an all-time high. Yep, that's an all-time high. Wow, look at that U pattern. Very nice. And it went above the 167.80 high of November of 2015, a peak F, plunges to a C, and goes from the 167s down to the 116s, I believe it was, 114 area in January of this year, and it's had a really strong, very nice move to the upside in a quicker time frame than I would have thought. So this says to me there's a real good chance I'm going to call this, I called it a gray B. I'm actually going to call this a blue B. I think it's very important that it, and I'm going to put a plus sign. I think the transports are telling us something very positive. Okay. Now this pattern, yeah, you remember I drew this in a little while back. I drew the rectangle in. And that rectangle says that at some point, regardless where the transports go to on the upside, at some point, I think we will come back and fall between 162 and 156. That's going to be the key for the next big move to the upside. That's the way I'm looking at it. Unless there's a move now that takes it above 178 to 182. I don't think that's going to happen right now. In fact, at this point, I think the upside is not unlimited, but I think it's kind of limited. Even in the Dow, I'm thinking that we're going to top out in this phase under 20,000. That's going to have to hold off for another day, somewhere around the 780s to the 890s, maybe 17,000, 19,000, about 150 points maybe from here to maybe 200 points. I'm not sure. Okay, that was that question there. Another question is the TLT. Would I look at what's happening in bonds? Well, I've started doing work now on this relationship that I've been talking about, that I've spoken of for, I don't know, I really don't know. Maybe it's 20 years. At least it's a long, long time, as long as I can remember, that there'd be a Japanization of our bond yields as we mimic what happened in Japan. And the big question for me, no one's actually asked me the question, but I've made it a question, have we ended that? Is there now a sea change? Is there a tidal move that says rates are going to move higher? I'm going to answer that over the coming weeks. I don't think there's a rush to do that right now. We know that the TBT, right here, the TBT, is at, let me see where it is. It's at 41.88. It made what I call the peak F top, but I had a question mark above it because it has all the characteristics that say if there is even one more pop to the upside above 42.15, it's the weekly chart that's going to garner more strength. And then we could move higher, and that would recycle this whole thing. And that'll become a new leg, G/C. More likely it's a C. So I'm going to just do this for now. Let me just, okay, we're done there. So what would happen in terms of the TLT? Well, the TLT is making this arch formation right here. arch formation. And as a result of the arch formation, what we're looking at is a pattern that says, because the monthly is breaking even on a Friday, which I thought was the day that should save it if it's going to do anything on the upside, it's breaking under this trend line that I drew a long time ago, and it's way under the 200-period exponential moving average. I have to tell you, even though it made a higher high, went all the way to 143.62, the week of August the 8th, 143.62, that was 7 points above the previous high of January of 2015. That trend line is broken, and therefore I think that 114.88 is going to be game. I think that there's a chance that we could head there. So this week is going to be really important. Why? Because we haven't broken 114.88, but we have broken the left side low of the week of the 13th of November of 118. We're at 118.07, but last week we went to 117.64. This is the week that says you've got to get back above that level to be able to show some kind of support and some kind of a bounce to the next upside resistance, which would be the 200-period moving average of 122.39. So far, it hasn't done it. The day's young. Anything can happen. I suspect that interest rates, and now if you don't mind, I'm going to go to the and I have to tell you, the banks are in a flurry, I'm hearing, trying to get things done, with people just desperately trying to lock in their mortgages now. And those people who were able to get 3.5, I think it was, for the rate for the 30-year, the new people are looking at over 4% and higher. That's a big thing. It means the amount of money you want to spend on the house to be able to buy it now caps you. It means that you've brought it down. The house is now, maybe 8%, 10%. You're going to have to pay 8% or 10% less than you could have before. So this is what we're looking at. The TNX, exactly the same thing. TNX could go from a peak G/C to a higher high above 24.92. That's the 10-year Treasury yield, T-note yield. And if it goes to 24.93, it starts D. And it extends your left side, right side price time match in the weekly chart. Wow, that's very interesting. So yeah, this is, and I think at a certain point coming up fairly soon, the market's going to say, hey, wait a minute, rates are really high. I don't think this is very good. And we'll see why is Ford acting so nicely? Why is General Motors? Oh, look at that. Let's see. Thank goodness we're still long, General Motors. We're going to be looking at that. Look at the housing. Oh, I want you to show the housing. We'll look at that in a moment. I'll put the chart up now before. Oh, let me just do this. We're about to wrap up this segment.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We've got Mike in a hurry. Mike, how are you?
How are you there, Basil?
I'm good.
Can you hear me?
I certainly can. You'd like to look at...
Canadian National Railway on the New York Stock Exchange, CNI.
Okay, so my question to you is, do you have a position in this?
No, I'm looking to go short.
Okay, so if you're looking to go short, I'm just doing a little work. I want to get this absolutely right. 55.16, yep, that's it. So we've got A, B, C, D, a brand new A, B, C, D. It likes D's, huh? A, B, and a C. Oh, okay, here we go. I would not be shorting CNI, Canadian National Railway. It looks really strong. In fact, what I'd be looking to do is on any pullback, it's at 69.76 CNI, trading at 69.76. I think it's, are you looking as a very quick short, or you're looking at it as a, you think this is going to go down for a period of time?
I'm looking for like a, I guess a seasonal short.
Yeah, I had a feeling, right. Yeah, but you're not looking for hours. You're looking for days and weeks, right?
Yeah, I'm looking for this tax loss selling to kick in, and the general market decline. This thing seems to be really overextended.
It is. No, I wouldn't put it overextended, because overextended to me is where the technicals are not confirming. And I love the 97%, 97.92 in the stochastic. MACD is very strong. Just a straight up, almost like a single leg, going to a leg E right now. All I'm going to say to you is, I think it is going to pull back. I would be surprised I'd be surprised if, well, the whole rail sector would have to pull back. But my thinking here is that if it pulls back, I'd have to watch to see how it's at 69.77. The support begins at 68.20, but the real support is between 67.5 and 66.5. That's key. And all I can say to you is, if on a short-term basis for a 3 or 4% gain, maybe you'll be able to time it by Monday. You could start a short. I wouldn't be messing with this on the short. I'd be looking at this more as a long, because I think everything about it suggests it wants to. Maybe it won't. It wants to test the all-time the high of September of 2014 of 75.92.
Okay, so your stop will be today's high, which is at the open at $70.
My stop, if you did any shorting at all, just to start a little position to experiment for a little quick short, thinking that then 69.98 was the high today. I'd make round number 70 my buy stop. I would even wait until Monday. But if you're thinking of it, let me look at the 120-minute chart. No, it's just really, I'm having a tough time. I can see it pulling back, but it's real tough to short, because it could still have a little pop to the upside. If you want to give it a 1-point stop from here at 69.76, I'd start to look at covering. If it breaks 68.28, I'd lower my stop to 69.28. And that's the way I would do it.
Your downside is what? Your
My downside is somewhere between 67 and 66.5.
Okay, so that's a 20-day moving average?
It's a 9-period moving average of 68.28, but oh boy, ask me a good question here. I've got so many. This is the 21-day moving average at 66.89.
All right then. Okay, I'm going to try it. Thank you very much.
Okay, but also think of going along at some point as well. Thank you for calling. All right, let's go to Rich. Let's go to Rich in Orlando. Rich, how are you?
Doing very well, Basil. How about yourself?
I'm well, thank you.
Good. Basil, we spoke a couple days ago on this UGAZ, and
Correct.
my hat's off to you. You had it exactly right. You had said we were around 45 at the time, and you were saying to sell a third and look to buy back around 41-ish, 40, in
Correct.
that area there. And in that day, we actually had gotten that move. I did not do it, but nonetheless, that was a good call. I don't think I would have been nimble enough to catch it back at the low. But now
that's the thing,
we've
right,
advanced
yes.
quite a bit from there. And my question is that 4-day period that we have there, is that enough of a consolidation for this to kind of have a decent leg up yet, or what are your thoughts?
So my question to you is, are you still holding it?
I am. I still have the original position.
So, well, congratulations. I mean, that's really nice. Good.
I mean, just fortunate, because more often than not, I'm not that fortunate. But this time, it seemed like it worked out nicely.
Okay, and you're absolutely correct. It did exactly what we were looking at. It hit the 9-period moving average, and then bam, it went right back in. I'm going to look at UNG. UNG has just gone to a leg D. Now, because it's gone to a leg D in almost a straight line move, it says it's got tremendous strength. It says that a pullback of the UNG, which is the root, United States Natural Gas Fund, because it's got that, I'm going to suggest to you that in the position that you have, now you really do have two choices. The first is to say, leg D within an eye blink of the high that we were looking at from October the 13th of $9.64. Today's high is $9.52. So I'm going to say to you, I don't really like to mess around with your position because, as I said before, you got in perfectly. You've done very well. But it's at this particular point that I am going to say to you, why don't you think of taking off a little bit?
Okay.
Because there's a reason for my saying that. It's gone to leg D already. Because it's gone straight up in D, it could even go to a leg E, so I don't want you to touch your root. But it also is saying that the V-shaped pattern in the weekly chart is suggesting that it might have a little trouble before it takes out the high that was made back in October of 964. And if it does that, then I would say to you, think about putting your position. Actually, I'm going to make it another suggestion. 918. Yeah, I have this in my newsletter as something we wanted to buy on a decline. I was hoping to get it before it made leg D. Because it made leg D, I'm actually going to change the entry point now. I'm going to make it a little bit lower. I'm looking at between $9.10 and $8.80, and I'm prepared to wait a little bit. This is a trend, a seasonal trend, so that's good. But at the same time, I do think it's going to take a little bit of a pullback. I don't want you to change your core position, but I am recommending just take a little bit off because it's had a really good move. And now you've got that money. I would be considering to put it back because my monthly chart says there's a good chance that United States Natural Gas Fund trading in 944 will be trading in the $10.50 area at some point in the next 2 months.
Okay. Now, actually, I'm talking about the UGAZ, but it would be the same as the UNG. Not the same, but it would track like the UNG. But the particular vehicle that I'm in is the UGAZ, the 3 times.
Which is tracking exactly like the UNG. It's in leg D. Both of them are in leg D. I'm going to say in your case, it's at 48.76. The area of support would be between 42.30 and 39.80. That's where I would like a period of a week and a half of consolidation.
Okay. Great. Thank you so much, Basil. Appreciate it.
Congratulations. You did a great job. So that's all right. We'll be back. Whoa, like time went quickly there. We'll be back with Rich in Orlando. We'll be back with Lou in Nashua. As soon as we get back, Dow's up 63, S&P's up 7.20.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
All right, folks, we're back for the final section. I do have a couple of questions that were asked to me, and I'll try to get them, but I want to get to Lou in Nashua. Hi, Lou. How are you?
Fine, thank you.
So the question is?
Yeah. The question is J.P. Morgan. I was thinking of buying calls.
All right, J.P. Morgan.
Yeah.
You see, one of the things about J.P. Morgan, it's had a spectacular move in just a very short period of time. Just a matter of 5 weeks, it's gone from under 70 to 84, and to me that says. I think you've got to keep your eye on J.P. Morgan. If you want to buy calls, I would say absolutely, but I wouldn't do it now. And the calls that I'd be looking at would be you don't have to even just sit there, put it on the side, put a little sticky note right next to your computer and say, in the next month and a half, if J.P. Morgan pulls back to it's at 84.72. If it pulls back to under 80, then I'd be looking at the February 80 calls, but I wouldn't want to pay more than $1.50 for them. So it probably has to go under 80. So that's what I'd be looking at. February calls. There'd be the 80 calls, but I wouldn't want to pay more than, I'm saying $1. By the time we get there, maybe it'll change, but I wouldn't want to pay more than $1.50, $1.25. Why? Because the monthly charges in leg B, I think it's still going to go to C and D, but it needs time to consolidate these huge gains. So yeah, absolutely, but don't get too carried away and don't be impatient. It'll go a little higher, but at some point it will pull back those 5 points that you want, and then that's the area that I'd be looking at it.
Sounds beautiful.
I
I have
hope that
another
helps.
quick question.
Yes.
NUGT is pulled back today. Do you think it's a good time to pop in?
You know, as long as the dollar is acting this well, I just don't see any reason to be nibbling on gold or doing anything with gold. No, the dollar's just too strong. I'd be staying away. I do think that some gold stocks are acting well, but Lou, just be real careful, okay? I wouldn't be doing that. Thank you so much for calling. Let's go to Ben in Tallahassee. Ben, we've got a brief time. What would you like to look at? Ben there? Oh, Ben dropped. I think Ben wants to look at SPXC, which is a stock we own. We bought it at 24.32. It's trading at 24.63. It's just stuck in a sideways pattern. So, Ben, all I'm going to say to you is I might even get rid of this for a little bit of a profit. It should have done the job. It's gone sideways. It's one of those that just suddenly moves. I don't know if I want to mess around. So I would be putting in a tight stop, maybe just at 24. Maybe that's what I'll be doing. But it just hasn't done the job. So it's one of those that we're not losing at this point, but I just don't see much. So a quick question is, Sharp, Tim wants to know about, is it Tim? Want to know about Sharp? No, Greg. Sharp, I don't know. They must have paid a fortune. Oh, Shopfly Inc. Sharp is the symbol at 42.25. Let's wait until Monday. I would not be doing it. If you're holding it, it's at 42.25. It's stuck in a range. I'll do it on Monday. And the other question was CCJ. Tim wants to know about CCJ. He's long. I would suggest to you, it's recycled. I wouldn't do anything right now, but Monday I might recommend to you take a little. In fact, I'm going to say that right now. At 10.60, it's acted fantastically. If you're just even a little bit nervous and you've been long, take a little bit off. It's gone from the $9 to 10.60 in just 2 weeks. Nothing wrong in taking a bit of a profit, but keep the core. I like the way copper's acting, so that's what I'm going to say. Folks, stay tuned. You've got your swim lesson coming up. I'm going to do something right now just to remind you. I did a webinar on Tuesday. The webinars are archived. It's a series of 3. The next one comes up on December the 20th, and then January, I think it's the 10th. You'll have time. If you get that webinar now, it's really the core of counting the waves. You see me do this all the time. Remember, I put in this morning, I put in that down arrow on the S&P 5-minute chart at peak E. You saw that, and now look where it is. It's pulled back. That's the techniques that I'm going to be I teach in that webinar, starting off with the wave count. Check it out, and you get my newsletter every day during the period of the 5 weeks that you have before. Hey, thanks for being here. Have a great week.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.